Hello, everyone. I hope that everything is working. And let me ask you to put something, type plus or something else in the chat, so that we make sure that everything is working and you can hear and see us. Just I'll wait a few seconds until we see the response. Yeah, everything is working, and I'm glad to see you. Today is the 12th of March, 2025. It's 2 p.m. Astana time, noon Moscow time, and I'm glad to welcome you on our webinar on international tax planning in Kazakhstan. And I'm joined today by Rana Diyarova, who represents Astana International Financial Centre. She will speak at the event. And a colleague of mine, Vsevolod, who is a senior manager of Global AIM, and he's focusing on international taxation of individuals. And my name is Viktor Kalgin. I'm a manager partner of Global AIM, and we, with our team, help our clients to develop tax-efficient international structures. This is what we do as advisors. And yeah, I'd like to welcome you, and maybe Zhanna, Vsevolod would like to say a few things before we start.
It is a pleasure to have all of you today here with us. So I hope it's gonna be interesting, and stay with us till the very end, because at the end we are going to have the Q&A session, and I think that this is the most anticipated one today. And well, just as usual, Zhanna.
Yeah, thank you, Vsevolod. Hi, everyone. I'm really happy to welcome you on our webinar. We've been working really hard to create a usable, interesting, and very nice content and materials for you. So I'm happy to welcome you again. As Vsevolod said, please stay until the end, because we're happy to answer to all of your questions, and I hope you're going to enjoy it. Thank you.
Yes, thank you, Zhanna. Thank you, Vsevolod. And let's start. And I will now, let me open the webinar by stating the three objectives that we are going to try to achieve during the event. We will review key tax efficiency considerations for international structures with businesses and activities assets in Kazakhstan. We will look at holding of assets, financing, and operational activities. That's our first goal. We will assess how these key tax efficiency considerations and principles really work in practice, and we will focus a lot on practical aspects of investing and working in Kazakhstan in terms of, well, from international tax perspective. And finally, we will explore tax incentives and various tax benefits and planning opportunities, so that you know how to improve the tax efficiency of your businesses, of your international operations and structures with assets in Kazakhstan. So these are the three objectives that we are going to try to meet. And yeah, there will be 2.5 hours for this webinar. And before I walk you through the structure of this webinar, there will be 6 sections, 6 parts, or 6 sections of this event. 2 things. First of all, you can ask questions, and you're welcome to participate. And whenever you have a question, you can type it in the chat, and we'll have a Q&A session at the end, and we'll try to address your questions. And second, and perhaps the most frequently asked question, is whether we are going to distribute the materials of this webinar. And the answer is yes. We are going to send the presentation as well as a recording of this webinar. It will take time, and most likely it will happen sometime in the middle of next week. So about a week will take us to prepare the materials and to process the recording of the webinar. But everyone who was registered will receive the webinar materials. So this is probably it on the administrative side. Now let's look at the structure of today's event. First of all, we will start by looking at the key features of the tax system in Kazakhstan, and specifically we will look at taxation principles of cross-border transactions, withholding taxes, and other similar tax planning considerations that need to be taken into account when developing international structures with assets in Kazakhstan. The second section will be specifically focused on investments in Kazakhstan, and we will look how to hold assets in Kazakhstan in a tax-efficient manner. And here, one consideration will be dividend withholding tax, and we will look how treaty benefits apply and what beneficial reduced withholding tax rates are available, and how to apply tax treaty benefits. In this section, we will review a court ruling where beneficial ownership concept was applied in Kazakhstan. Then in this section about investments in Kazakhstan, we will look at other planning opportunities on withholding taxation of dividends, and we will address how sale of assets in Kazakhstan is taxed. The next section will be about the Astana International Financial Centre, and I will give the floor here to Zhanna. She will welcome the participants and will explain how Astana International Financial Centre works and what benefits it provides to investors. We will then look more closely at tax benefits and specific tax incentives that are provided to participants to the AIFC. And I will then pass the floor back to Zhanna so that she could explain some practical aspects related to registration and working in the AIFC. Всеволод will then talk about investment tax residency, and then at the end of this section, I will explain how AIFC funds work and how Kazakhstan in general works in terms of outbound investments in other countries. Next, in the fourth section, we will look at financing structures. We'll briefly review capitalization rules, and there is an issue on cross-border cases that's, well, we see more and more cases in practice that is related to withholding taxation problem associated with gross-up provisions in loans. This will be in the financing structure part, and then we will move on to operational structures, where we will look at key tax rules that are applicable to operational structures. We will review some case law. There will be two cases where there were disputes between the taxpayers and the tax authorities about various tax aspects of cross-border payments for services and royalties, for example. And we will then briefly look at benefits for IT companies and what the Astana Hub Technopark can offer in terms of tax incentives, tax benefits for its participants. And we will finish off by a Q&A session. So this is the plan, the 6 parts. And as I said, let me repeat that the materials of this event will be distributed to all participants, but also we will publish them. We will publish the presentation most likely today or tomorrow. We will publish this presentation at our corporate LinkedIn page, so you can follow us, and the link to the LinkedIn page will appear now in the chat, so you can follow us immediately, so that you will be the first one to receive the materials of this webinar, and you can also subscribe to receive news and materials on tax planning and international tax updates. Yeah, and as I said, the materials will be sent by email to all the participants. Okay, so the first part, the main things to consider to keep in mind when investing in Kazakhstan. First of all, Kazakhstan is one of the largest economies in the CIS region, and it has it is the regional leader in attracting foreign direct investments. And for me as a tax professional, it's not surprising that one of the largest or even the largest investor in Kazakhstan is the Netherlands. And there are obviously business reasons for that, but there are also tax reasons. And the treaty between Kazakhstan and the Netherlands is one of the reasons why this country, this jurisdiction was chosen by investors to make investments into Kazakhstan. What we see over the last years is there is a growing trend of increasing the tax burden for companies in Kazakhstan, and it affects cross-border structures and transactions. So we look closely on what's going on in Kazakhstan in terms of taxation, especially of international investments and businesses. And the main trend is overall taxes are taxes are getting the rates are getting higher, but there are good news, and we will cover that during our presentation, during our webinar as well. So the key tax rates, 20% is the corporate income tax rates that applies to profits of companies. There is VAT. Currently the rate is 12, but it's very likely to be increased next year. And personal income tax is 10%. Again, there were discussions about progressive scale it's being considered to be introduced in Kazakhstan. The progressive scale is being considered, but currently the rates are, I would say, modest compared to other CIS countries. They are relatively competitive, so to say. What else? The tax legislation also includes CFC rules, and this is important for outbound investments and for all companies who and individuals who have foreign assets. There is so-called net income tax or branch remittance tax, which is paid by branches that conduct business in Kazakhstan. There are transfer pricing rules and capitalization rules. And importantly, Kazakhstan is not included in Russia's list of so-called unfriendly countries, which attracts additional interest and investments from Russian companies to Kazakhstan. And we see and work a lot with Russian companies who consider or have investments into Kazakhstan. And one of the reasons is that Russia does not consider Kazakhstan as an unfriendly country. For international tax planning, international structures, what is called withholding tax is important. When does it happen? If there is a company in Kazakhstan and a foreign company, and the former pays income to the latter, then this payment can be subject to so-called withholding tax, which is technically a tax on the foreign income recipient, but it's payable by the company in Kazakhstan that pays this income. So this is withholding tax, and it should be considered when planning investments. Different countries have different rules and approach withholding taxation differently. In Kazakhstan, I would say, first of all, traditionally, similar to many other countries, so-called passive income is subject to withholding taxation, and I will show the rates on these slides, and you already see that dividends are mentioned as a type of income which is subject to withholding taxation, but also other passive types of income, such as interest and royalties, are subject to taxation. There are other types of income which are subject to withholding tax, and we'll look at it a bit later here. But dividends are subject to withholding tax at a rate of 15%. It can be reduced to 10%. This is a so-called 3-year incentive. If the holding period is long enough, then withholding tax can be reduced. There used to be an exemption for 3-year or more investors, but it's now only 10%. And but it is possible to reduce the withholding tax even further, and the achievable rate, as is shown on this table, is 5% or even 0. And we will look closely how this can be achieved later as we go. Interest is subject to withholding tax at a rate of 15%. It can only be reduced to 10%. There are other incentives, but if we look at specifically at reduced treaty rates, withholding taxes based on international treaties with other countries that Kazakhstan has, then it's only possible to reduce it to 10%. There is no treaty that allows to that gives lower withholding tax rates than 10%, which means that whenever interest is paid or even accrued, since the rules in Kazakhstan envisage that even deduction of interest triggers withholding taxation. So whenever interest is paid or deducted, it should be subject to withholding tax in Kazakhstan. Similar situation is with royalties. The domestic rate is 15%, the reduced treaty rate is 10%. Capital gains are taxed from sale of companies in Kazakhstan, Kazakhstani companies. The domestic rate is 15%. It can be reduced to 0, similar to the 3-year exemption for dividends. There is a 3-year exemption for, 3-year incentive for dividends. There is also 3-year exemption for capital gains, and the achievable rates under treaties is 0. We'll look at it more closely, but treaties usually allow, except for real estate companies and subsoil users, treaties allow to reduce the rates to 0. Services, the services are subject to 20% tax withholding tax rate, and the treaty allowed to exempt services from taxation at source. And international shipping is not uncommon for countries to consider international shipping income as a source income that is subject to withholding taxation. So this is it. As you can see, different types of income are subject to different withholding tax rates, and the difference between the basic or domestic tax rates and the rate that can be achieved is significant. This is why planning of holding and international holding operational as well as financing structures is so important, is to make sure that benefits apply and the reduced rates can be relied upon. Let's look at now how holding companies can receive income from Kazakhstan in the form of dividends, and what withholding tax implications apply in this case. So we will look at dividends and a bit later at taxation of capital gains, with an aim to understand how to structure investments into Kazakhstan and how to avoid tax inefficiencies from the very beginning, from the start of the project, when you select how you establish subsidiary in Kazakhstan and what company, your group structure is the parent company for this investment. So if dividends are paid from Kazakhstan, the dividends withholding tax apply. These dividends can also be subject to taxation at the level of the holding company, and capital gains can be subject to taxation in Kazakhstan as well. So these 3 main considerations should be taken into account when structuring investments from abroad into an operating company in Kazakhstan. Dividends withholding tax rates vary, and it's really the range of rates that can apply to dividends is broad. First of all, as I mentioned, the domestic rate is 15%. Then if dividends are paid to a country which is considered an offshore jurisdiction or a blacklisted country, then the rate is increased to 20%. But there is a 3-year tax benefit, tax incentive, which applies and allows to reduce withholding tax on dividends to 10%. Under tax treaties, the rate can be even further reduced to 5%, not under all treaties, but we'll look at a few examples where dividends withholding tax can be reduced to 5% under the all tax treaties that Kazakhstan has with other countries. Reduced rates of 5% is also was envisaged in a draft tax code that was published last year and which is still under consideration. And this is also good news, and we will hope that this reduced rate under certain conditions, and we'll look at it later, under certain conditions will apply, which will be beneficial for strategic investors, so to say, in Kazakhstan. And finally, there is an exemption for participants in the Astana International Financial Centre, which attracts close attention to this platform, and we'll look how this can be tax incentive tax exemption can apply in international structures. So let's now look from one by one at different cases, what rates apply in different situations. In the most straightforward case, if there is a holding company that receives dividends from Kazakhstan, the base rate is 15%, and the blacklisted countries, if the holding company is in a blacklisted jurisdiction, then the rate is 20%. The blacklist contains more than 50 countries, including common offshore countries such as British Virgin Islands, Cayman Islands, Channel Islands, and importantly Malta and Hong Kong. Malta and Hong Kong, they are very often present in international structures in large corporations, but if they are chosen to be investors to provide to invest in Kazakhstan, to hold assets, to be parent companies. If the parent company is in one of those countries, then dividends are going to be subject to tax at a higher rate, which is probably is not a good idea to structure investments in such a way. The good thing is that the list doesn't include the United Arab Emirates and Cyprus. Cyprus used to be in the blacklist of Kazakhstan, but it's not anymore. Even there is a double tax treaty with Cyprus. So yeah, those countries are not disadvantaged. So the United Arab Emirates and Cyprus can be used to structure investments in Kazakhstan. The 3-year tax incentive. Let's look at it more closely. The reduced rate is 10%, and there are 4 conditions to be met so that the reduced rates of 10% apply based on the domestic law. We are not looking at tax treaties yet, but only at domestic reduced withholding tax rates on dividends. First of all, there should be 3-year periods, holding periods, from the date when the participation, the share was acquired, until the date when dividends are accrued or distributed, or at least declared, let's say. Second, the operating company in Kazakhstan is not a subsoil user or doesn't have assets that contain 50% of, or subsoil users do not contribute do not represent more than 50% of the operating company's total assets. So whenever directly or indirectly large parts of the value of the operating company is represented by subsoil users or companies that basically extract mineral resources, then the reduced 10% rate does not apply. 2 other conditions: the holding company is not in a blacklisted jurisdiction, which is reasonable, and the 4th condition is that here is duplicated. Actually, I think I will change. I will make revisions to the final slides here. The reduced rates applies 3-year holding periods, no subsoil user, and not blacklisted country. There might be just 3 conditions. I will make an amendment in the final presentation. So for many companies, the reduced 10% rate is achievable, which is better than 15% rate. Next, if the holding company is located in a country with a favorable double tax treaty with Kazakhstan, then the withholding tax rate can even be reduced further to 5%. And good treaties includes countries such as Kazakhstan has good treaties with countries such as France, Germany, the United Kingdom, the United States, Switzerland, Cyprus, the Netherlands, Luxembourg, the United Arab Emirates, and Singapore. There are more treaties that's about I think about half of more than 50 double tax treaties that Kazakhstan have envisaged for 5% withholding tax rates. But not all countries can enjoy the reduced 5% rates. And with Russia, Kazakhstan has not the most favorable treaty, and the withholding tax rate is 10%. Well, it is what it is, but still, Russia is one of the biggest investors in Kazakhstan, despite this certain disadvantage of not the best withholding tax rates on dividends. It is important how the reduced rates apply in practice. And according to the tax codes of Kazakhstan, the tax agent or the operating company that pays dividends can only apply the reduced rates and the tax treaty benefits in one of the three cases. So it is sufficient to fall under one of the three conditions. First of all, the holding company should be dividends in hands of the holding company should be subject to taxation at a rate of at least 15%. So there is a subject to tax rule. Second, the dividend recipient is not a related party, and the tax treaty between the country where the holding company is located and Kazakhstan has not been amended by the multilateral instruments. It is difficult for dividends, as you can imagine. It's difficult to fulfill the conditions 1 and 2. Specifically, dividends are very often exempt from taxation in the countries where the holding company is located. For example, in Russia, dividends are exempt. In the Netherlands, in many countries, there are participation exemption conditions. So under more or less strict rules, dividends can be exempt, and it's reasonable because dividends paid out of profits which have been subject to taxation in Kazakhstan in this case. So it's reasonable to exempt dividends, but technically it doesn't allow to fulfill the subject to tax criterion. The related party condition, again, the holding company being the parent company and having share in the operating subsidiary is most likely related party, and Kazakhstan has a 10% threshold for definition of related party. This is why holding companies are very often considered related parties, which means that only if the tax treaty with the holding company's country was not amended by the multilateral instruments, only in this case it's possible to apply the benefit, the reduced withholding tax rates by the tax agent when dividends are paid. And there are a few examples. For example, Cyprus treaty between Kazakhstan and Cyprus is relatively recent, and it was not amended by the multilateral instrument because already provisions were included into the treaty. And Germany didn't include for some reason Kazakhstan into the list of countries to which it applied the multilateral instrument. So the treaty with Germany has not been changed by MLI. But otherwise, this third condition is not going to be met. For example, with the Netherlands or with Russia, treaties have been changed by MLI, which means that when dividends are paid, technically, the tax agent, the operating company, is not able to apply treaty benefits. The proper mechanism is to refund the difference between the treaty rates and the domestic rate, which can be difficult. It takes time, and it's more difficult to refund tax than to apply the benefits, to apply the treaty, the reduced rates when dividends are actually paid. This is a problem, but it is what it is. This is why, in many cases, it's the conservative approach would be not to withhold, not to apply treaty benefits, but ask for refunds or even to forego the treaty benefits altogether. When talking about reduced withholding tax on dividends specifically, or in general on reduced withholding taxation under treaty conditions, four practical considerations are important. First of all, to apply the reduced rates, it will be necessary to provide a tax resident certificate to prove that the holding company is a tax resident in the country where there is which has a double tax treaty with Kazakhstan. Second, in certain instances, if the parent company or any foreign company that receives income subject to withholding tax has a branch or permanent establishment in Kazakhstan, it may be difficult to apply treaty benefits. And we'll look at a case, at a court ruling where this was specifically addressed by courts, and we'll see what the outcome was. But unfortunately, if there is a branch of the holding company, for example, in Kazakhstan, then technically the tax authorities may challenge the application of reduced treaty rates for dividends or any other income that this company receives. There is also an issue of tax paid from the tax agent's funds. And we will look at it based on a couple of examples. But for now, just keep in mind that if the tax is not paid properly, if it's not withheld but grossed up, for example, after income was paid to the foreign company, then it will be difficult to, the treaty benefits can be challenged by tax authorities. This is a practice and emerging trends in Kazakhstan. And finally, and not surprisingly, the foreign company should be the beneficial owner of income. And this concept, it deserves a closer look. And in our next part, in the section that follows, we'll look at a specific case where the beneficial ownership concept was applied. Again, why this is important? Because treaty benefits only applied to income recipients who are considered beneficial owners of a beneficial owner of this income. There was a specific case a few years ago where a company in Kazakhstan distributed or declared dividends to its Dutch parent. As you can see here, the Netherlands were used to structure investments in Kazakhstan, which is not surprising. So the company in Kazakhstan, the subsidiary, declared dividends, but there was another company in the group located in Germany, which actually received dividends and then transferred or otherwise settled its obligation to the Dutch holding company for the dividends it received on its behalf. The reason was practical, as I understand. The Dutch company didn't have proper bank accounts or didn't have the bank accounts which was necessary to receive dividends, while the German company had a bank accounts which allowed, which just helped to facilitate the transfer of declared dividends to this company. But again, from legal perspective, dividends were declared to the Dutch holding, but technically they were paid through an intermediary in Germany. This is the backgrounds of this case. And the company applied the 5% withholding tax rate under the treaty with the Netherlands, but the tax inspectorate disputed the reduced rates and claimed that the company was not entitled to treaty benefits because the payment was not made to the ultimate beneficiary of this income, of these dividends in this case. Long story short, the court ruled that the taxpayer was correct, and there are three conditions to be met in order to apply the reduced preferential withholding tax rates. Those are, first of all, there should be a tax treaty in place, which was met. There is a treaty between Kazakhstan and the Netherlands. The non-residents should be the final recipients of income or beneficial owner of income. This is the same thing. And the court decided that condition was made, not least due to the evidence that was provided. In particular, the German company didn't reflect this dividend income in its accounts, and there was a settlement between the German company, the German company and the Dutch company, so that dividends were ultimately, in one way or another, transferred to the Dutch company, which was the direct shareholder of the Kazakhstani subsidiary. And finally, the recipients of income should be the residents of the country with which Kazakhstan has a double tax treaty, which was the third condition was met as well. So the court ruled that the Dutch company was entitled to treaty benefits, and the 5% rate was applied correctly. So this concept, this is an emerging trend and an emerging concept in Kazakhstan. What is the beneficial ownership of income? First of all, as is seen from this case, the company that technically receives payment is not always the actual or beneficial owner of this income, which is not surprising. That the company can be an intermediary, and it wouldn't be fair to apply treaty benefits to a company which was a mere conduit company or an intermediary. So it's not surprising. Second, it is important how cash flows are structured, and actual payments of income, at least in the context of this particular case and in other cases that we see in practice, are important, but it's not the only determining factor. Other considerations are important as well. So, for example, if company has proper substance, it positions, it can better defend itself as the beneficial owner and being entitled to tax treaty benefits. And in practice, the conditions, the criteria for beneficial ownership is often shaped through case law and practice, and it remains to be seen how practice will develop in Kazakhstan in this respect. Okay, so so far we looked at withholding taxation of dividends and available rates, and looked at how the reduced 5% rates, withholding tax rate, can apply based on tax treaties that Kazakhstan has with other countries. Let's look at other planning opportunities and other ways to apply reduced withholding tax rates on dividends. We have a couple remaining. One is 5% withholding tax rate on dividends was envisaged in draft tax legislation, which is currently being considered, which was published last year, and the conditions were 25% of capital, and that's it basically. So for any strategic investor, it was planned to grants domestic reduction of withholding tax rates on dividends to 5%. We'll have to wait and see. The tax code is being discussed currently. It's not guaranteed that this change will apply, but if plans come true, then this is going to be good news for taxpayers, because it's easier to apply this domestic rate instead of treaty benefits, which can be challenged, and there are certain procedural aspects that can be difficult to follow, such as refunds of excessively withheld tax to apply tax treaty benefits. So this is a welcome development. We'll see how it goes, and let's indeed wait and see. It's plans that changes to the tax legislation will come into force starting next year, 2026. And there is withholding tax exemption on dividends paid by participants to the AIFC. And this is a very generous exemption. First of all, zero rate is already very beneficial. As we saw, it's not possible to achieve the exemption from withholding tax on dividends based on domestic or treaty provisions. This is why this exemption for the AIFC participants is kind of unique. And even more, it applies, for example, regardless of the holding period. The only requirement is that the operating company is a participant of the AIFC. There is an additional condition for public companies. They should be actively traded, but there is nothing else. And even if the holding company is located in a blacklisted country, then still dividends are going to be exempt from the whole taxation. I would add from practical experience that it's important that the operating company has shares, because shares or participating interests. So for regular companies, the exemption applies, but it's important to look at the company's bylaws, because the exemption applies to dividends. So from legal perspective, the distribution should be in form of dividends rather than in form of any other income, and it should be distribution of dividends on shares or participating interests in the subsidiary. And this is it. So the exemption is very generous. We will look at it once again later when we discuss tax benefits of AIFC. But this is what this is the advantage of investing or going to the AIFC. So conclusions, 3 key takeaways. Taxation of dividends paid abroad depends on the structure of ownership. And again, it's important to plan it from the very beginning. And the tax rate can range from 0% to 20%. So the difference is substantial. This is why planning is important. Second, the treaty rates of 5% and 10% are not always easy to apply. There are both procedural aspects, as I mentioned, refunds mechanism sometimes applies, and there are rules aimed at preventing abuse. For example, beneficial ownership concepts. But there is hope, and the success factors are planning, adaptation of structures, and protection of benefits in the structure. So this is what we help our clients to achieve. Okay, to complete the section of structuring investments in Kazakhstan, let's now look at the taxation of sale of assets, and if the operating company is sold by the holding company, as is seen on this diagram on this slide, capital gains can be subject to tax. This is the rule of how Kazakhstani tax system work. So in this picture, there are two layers of holding companies and the operating company in Kazakhstan. So if the sale is direct, the Kazakhstani company is sold, then this income is subject to tax, withholding tax at a rate of 15% or 20% if the seller is from the blacklisted country. And indirect sale is subject to taxation as well. And if in this structure, if subholding companies' shares consist of assets in Kazakhstan by more than 50%, then this indirect sale by the holding company is also subject to taxation in Kazakhstan. This is the rule. Then there is a 3-year exemption, and income is going to be exempt from taxation both in case of direct and indirect sales if 3 conditions are met. First of all, the seller is not in a blacklisted country. Second, the holding period is 3 years, and the company which is being sold is not a subsoil user, and its assets consist of subsoil users' assets by no more than 50%. In case the structure is more complex than just direct sale of a single operating company without subsidiaries. This third condition apply. Okay. Is it possible to exempt capital gains from taxation based on tax treaties? The answer is yes, sometimes. First of all, the exemption only works for regular subsidiaries, not being subsoil users or real estate companies. And second, there may be a refund mechanism as well here. We'll not go into details, but to apply treaty benefits similarly to dividends, technically it may be necessary to withhold tax at source at the domestic rates and then ask for a refund from Kazakhstan, from the state, which means that the 3-year exemption, the domestic exemption, works better. There is no need for refunds, which is advantageous for long-term strategic investors in Kazakhstan, which is fair. Again, similar to dividends, there is exemption for capital gains for participants to the AIFC. And again, this benefit applies regardless of the location of the holding company, similar to dividends. No exception is made for subsoil users, which again makes this exemption more beneficial. There is no holding period. There is no requirement for active trading. Even if the company is a public company, the active trading criterion only applies to dividends, and for example, to exemption for dividends. And it is important for this particular exemption. It is important that the sale takes place at the level of the participants, which is registered with the AIFC. So in case of indirect sale, the exemption does not apply. Capital gains, so we looked at it, 3 key conclusions. In Kazakhstan, sale of subsidiaries is subject to taxation, even in case sale is made indirectly at an upper level. Companies that are not subsoil users can usually sell or can usually be sold without withholding taxation, without tax, if 3-year exemption applies, so there is a relief under a double tax treaty. And finally, there is no much difference from a structuring perspective in terms of capital gains, leaving apart the structuring through the AIFC. It's really impossible to select the location of the holding company or the parent company so that additional advantages or benefits can be achieved. So the planning mainly should be focused on taxation of dividends, and it's important here to avoid blacklisted countries, companies from blacklisted jurisdictions in the ownership chain. This is basically it. And it's important to mention tax reform that will affect investment planning and international holding, let's say, structures. in Kazakhstan, with assets in Kazakhstan. There are three possible positive developments. I already mentioned the reduced domestic five rates for dividends for strategic investors of 5%, if participation in the subsidiary is at least 25%. It is also planned to eliminate the subject to tax tests. And I mentioned it when we talked about dividends, that in order to apply one of the ways to apply treaty benefits when paying dividends at source is to make sure that these dividends are subject to taxation at the holding company's level, which is difficult, and it can only be welcomed that this subject to tax rate test is planned to be removed, abolished. We will see how it goes, but this is probably a welcome development. And finally, the third positive development is that the tax incentives in the AIFC are going to continue to apply. At least it was announced last year that the tax incentive in the Astana International Financial Centre are going to remain in place. Okay, so now it will be reasonable, logical to look at the advantages of the Astana International Financial Centre. And here I will hand over to Жанна from the AIFC, and she will welcome the participants and explain what are the benefits of investing to Kazakhstan through the AIFC.
Everyone. Thank you, Victor. As mentioned previously, my name is Zhana Diyarova. I'm the Director of Participant Support and Sales team here in the AIFC, Astana International Financial Centre. And today I'm going to talk about our jurisdiction, its advantages, and after that I will be sharing some practices and important stuff that you might consider if you would like to be an AIFC participant, or maybe you already are. So let's start with the Astana International Financial Centre itself, what it is, and why we exist. So to understand the background of creation of our jurisdiction, you have to understand that back in the days, the government of Kazakhstan wanted to create an alternative to the resource-driven economy. To create some platform where the capital related companies, capital market, financial companies, professional companies would strive, and that way stimulate the economy by creating jobs, creating the transactions, creating and providing alternative source of finance, etc. And so that's how the idea of financial center was born. We examined what are the key elements of such economical boost can be, and what kind of platform can create such boost and such stimulations. And we quickly realized that the benchmark of success stories would be the financial centers. Usually financial centers, like in a classical sense, you would think of New York, you would think of Singapore, you would think of DIFC, you would think of Hong Kong. These are the places where the companies would be centralized in some place. Usually it's a city. By creating these opportunities to invest, by creating opportunities to diversify portfolios, and providing this kind of platform to the potential clients. And from there, like a roots in the tree, you can see that the ecosystem is booming. Jobs are created, restaurants are being built, just like in the AIFC example. The flows of professional companies increases, and this is how the human capital also increases in terms of the education and stuff like that. So it was quickly understood that the financial center is the benchmark and the success stories, and this is the solution to the goal that was in front of the governments. And so we realized that we wanted to be not just a financial center in the Kazakhstan, we wanted to be a regional financial center that would facilitate the growth and the economy. Another reason why we decided to create such platform is when we're looking at the larger map of the region, you can clearly see that not the region itself has a lot of opportunities and possibilities, and we can see the growing demand from foreign investors, from local investors, to create something to go for those investment opportunities. However, often when examining the region, either local or foreign investors would face with the risks, all kinds of risks, and we wanted to create the framework, the platform. I'm gonna use platform word for a lot of time. As you can see, it's just such a great word to describe what we are. So we wanted to create a platform, a legal framework where the businesses can lend their projects, they can lend their team, and grow into the region itself. And one of the reasons why is because we haven't seen a lot of infrastructures with that features as a financial center in the region. So we decided to fill in this gap and to provide this platform to the local and the foreign businesses. Now, when examining the benchmarks and understanding what does drive the businesses, what does drive these companies to choose the jurisdictions, and understanding what is the success story here for the financial center, we quickly realized that there are certain elements that the businesses are looking in when they're choosing the jurisdictions and the platform where they build their businesses in. So for you to understand what AIFC is, if you're familiar with the DIFC, Dubai International Financial Center, or DGM, or Hong Kong, we are separate territory within the Astana city, which is the capital of Kazakhstan, with our own jurisdiction. And our jurisdiction is based on English common law principles. It was chosen because it has been proven to be basically most likely companies choose the jurisdiction of choices when the English common law in place, because it's a preferable type of legal framework for the businesses, for commercial growth, for the transactions, even in terms of the relations between the companies and employees. So we also not only we applied these principles when we're writing our legal framework, we also used the high-level world-class regulation standards in order to make sure that anyone who would like to enter our jurisdiction are compliant enough, and I don't want to say sophisticated enough, because sophisticated itself it's a little bit limited word, but we want to make sure that the regulation here, based on which our companies live in, they're in compliance with the world-class regulation. Also, we are seeing a lot of demand for the capital market, and that is one of the ways how we can increase the economy in the country and in the region. That's why we established our own Astana International Exchange. In addition to whatever I said, we also have the independent judicial system. It means that our court is independent from the Kazakhstani judicial system. All the judges there are, again, independent. They're all foreigners, so to avoid the possible conflict of interest, and that's one of the. And all of the judges, by the way, have an amazing experience in terms of the English common law principles. We have a separate tax and currency regime. One of the examples was already mentioned by Victor, and will be also talked a bit in more details on this webinar. I'm going to go over a little bit of the specific advantages of that. We also have a simplified labor and visa regime. All of it, I'm going to talk about it in detail and I'm going to stop by each point. So in terms of the jurisdiction that is based on the English common law principle, it's very important to understand the difference that we are English common law principle based jurisdiction. We're not a part of UK. We're not a part of London. This is not, a piece of earth that only spoken in English or whatever. We are, however, the legal framework that was based on world-class regulations and standards, and we were guided by the principles of the English common law. It means that the standards are high, the practices, the procedures, the processes of certain of all of the legal framework stuff is based on English common law principle. However, it is adapted to our basically reality, because we have to understand that the market itself in Kazakhstan and the region is quite different, as you imagine, from UK, USA, and etc., and other English common law jurisdictions. Therefore, the beauty of our jurisdiction is that it has the high standards, the very familiar legal framework that you would see in other jurisdictions. However, many thresholds are adapted to our local market. So, as you can imagine, some of them would be arguably lower than in the AIFC, not because we don't have the high standards of them all, it's because we have to adapt to the market. And that's the example of how our legal framework works. We do have a variety of legal forms, organizational legal forms, I mean. And if you're familiar with Kazakhstan and you've been here before, you would know that, well, first of all, Kazakhstani law is based on continental law. So we have just a handful of organizational legal forms. It's TO, AO, it's a public company, limited liability company, and NIP. This is for the entrepreneurs. In our jurisdiction, however, we have around 30 organizational legal forms that serve variety of purposes, depending on what you're looking for and what would you like to establish. The most popular one, of course, is the private company, as you may assume, if you're familiar with the common law principal jurisdictions. And that's not only the case in the AIFC, it's also the case for other jurisdictions as well. However, if there are specific cases, such as like you would like to establish a consulting practice, you can do that with the variety of partnership organizational legal forms. You can utilize an investment company organizational legal form for fund structuring or LP structuring, LPGP, the classical organizational legal form for funds and managing companies. We have a special purpose company, special organizational form for the transactional base structure. So a lot of things to choose from depending on your activity, and also we have our exclusive jurisdiction over disputes in the AIFC court. And I'm going to talk about AIFC court just now. So the independent AIFC court and arbitration center exists in the AIFC, so we have exclusive jurisdiction over AIFC participants. However, the beauty of our court is that you can use its platform even if you're not an AIFC participant. If you have a company, I don't know, in Kazakhstan or overseas, you can have the provision in your contract or agreement that the jurisdiction in case of disputes would be the AIFC court or arbitration center, which has been used a lot, and there was some statistics that were quite a lot of cases in the court and arbitration center were actually not even from Kazakhstan or not even from the AIFC. They were from the neighboring countries, because The quality of the court that you receive is very similar to the one in UK, because the judges usually have a lot of experience in English common law jurisdictions, and we choose only the best. But also that the court fees are relatively smaller than the classical jurisdictions, and plus a lot of countries, neighboring countries, have better access in terms of logistics to come to our country rather than going to Europe, etc. So that's one of the advantages of using our court. So we have 57 international arbitrators and mediators. I think actually even more as we speak. I saw the number last week. I think it was bigger. The arbitration and mediation cases, we have over 3,000, and over 160 judgments and orders. So as you can see, it's been widely used in the AIFC. I'm just gonna stop here really quick. This is actually a 3 different slides, but I didn't want it to bore you and give you too much information, because I think there's a lot here today to unpack. But we do provide, like, our platform provides a platform again to act as the capital. But what I mean by that is that for the companies that seek for extra fundings or would like to go and go to the next level of raising capital, they can use our IX Astana International Exchange platform, which was established with Shanghai Stock Exchange and Chinese fund, a Silk Road fund. We also have other technological partners like NASDAQ, and also basically this exchange creates an alternative solutions to the foreign companies in terms of attracting the capital. Some of the products and some of the investment instruments that haven't been used in the region or in Kazakhstan can be used in IX. Another direction that we do is we support investors outreach. We have a dedicated team for that, in case if you don't want to go public or publicly listed, and you want to do the private equity kind of deals, you can certainly reach out to our team. And variety of financial instruments. This more refers to our actual participants, and I'm going to talk about them in a moment. So as I said, we have a special tax regime. This is where I would like to pay special attention. And as you can see, we don't have a tax haven. We are not a jurisdiction where you receive 0% on anything and everything, because we were never meant to be a offshore jurisdiction. We never wanted to be a transactional jurisdiction just for the sake of transaction. What we're building is we're building a real platform, a real environment and ecosystem for companies to strive to grow. And therefore, as you can see, the focus of our tax regime goes around authorized companies. Authorized companies are companies that received a special financial license. I'm going to talk about it in a bit. So basically, if you are a financial company such as broker or fund manager or bank, you will receive a 0 tax on corporate income tax, 0% on VAT, and withholding on dividends and capital gain tax. So the last one, as Victor mentioned already, applies to every participant, no matter the license or no matter the activity. And again, this is not a tax haven jurisdiction. We do have, we wanted to make sure that there are no like dormant companies. We want to make sure that the companies really utilize their services, they utilize our platform and create the environment and ecosystem here. Therefore, the tax exemptions are mainly based on authorized companies and on dividends, which I think is quite generous as itself. So as Victor mentioned as well. So, what kind of activities do we have here in the AIFC, and how can you? No, sorry, I'm gonna ask a question differently. The question I'm being asked a lot is, so what can I do in the AIFC, and what kind of business can I have if I want to become an AIFC participant? So in general, we have three types of participants. First are the ones that conduct the financial business. These are the ones that receive the most tax benefits, such as brokers, fund managers, banks, insurance companies, financial advisors, etc. So basically, we have a list of companies. They're in our general AIFC general rules, Schedule 1. So anyone who is in that schedule, so any activity that in that schedule is subject to licensing and therefore considered a financial business activity, or as we call it, a regulated activity or market activity. Professional services would refer to the companies that provide consulting services, audit consulting, legal consulting, tax consulting, such as Big Four or legal boutique firms, etc. They're the very important and essential part of our ecosystem as well. And the rest, who are not under the first two categories, they're non-financial business. So basically it can be IT companies, marketing, holding, etc., etc. So basically, if you're not on the list of regulated activity / financial business, or your activity is not on the list of professional services, or as we call it, ancillary service provider, then your activity is non-financial business and is not subject to the license. So in total, we have more than 3,600 AIFC participants. Among them, we have more than 120 authorized financial companies, so the companies that receive a financial license, and around 183 consulting firms, the professional services that I mentioned. The rest are non-financial businesses, as you can see. So I don't want to take a lot of time, but it's just I can talk about AIFC forever. So non-conventional finance, I'm trying to be quick here. So the innovation itself and unconventional way of doing traditional things is something that is a part of the AIFC and has been since the day one. And there are three directions that we go on, specific that we pay special attention is the green and sustainable finance. We have a dedicated subsidiary that provides the green and sustainable finance consulting. They help with the issuance of the green bonds. They help to certify a businesses and call them green. We also have an Islamic finance direction, which represented by a full-on ready-to-use Islamic finance for legal framework. So basically, we for companies to call itself Islamic finance, we have everything so that the company can come in, be in compliance with those rules, and they can call themselves Islamic finance company, and they conduct Islamic finance Sharia compliant activities. And fintech is one of the most progressive and exciting fields, I think, active fields that we have in terms of unconventional finance. We have a sandbox, a special based regime for the companies that would like to try on non-conventional and fintech financial technologically based activities. So for the example, so that you understand, all the cryptocurrency activities currently can be conducted only in the AIFC. And before I think this year or last year, any crypto activity could be done only in sandbox. And this is where our regulator was able to learn the market, teach the market itself, and now we're ready to have companies fully providing regulated activity in FinTech Lab. So, for example, the Binance, Bybit, all of those crypto platforms, they have been a participants on FinTech Lab sandbox, and now they're converted into the full regulated company. Now, this is important to note that we are in compliance with the global standards of the OECD and EAG. By we, I mean our jurisdiction, as well as Kazakhstan jurisdiction as well. This is very important, especially for the businesses that would like to expand internationally. Why this is important is because when you're conducting business with your counterparties, counter agents, and most likely you'll get through the compliance procedures. And this is something that you already heard, and you will hear a lot more, compliance this, compliance that. And so for us, this is very important that our jurisdiction stays in a green, in a white zone. It's not, it's not black or gray zone, or like, you know what I mean, the zones that will not get access to, to good compliance check. So the fact that we are in compliance with the global standards definitely help our participants to go through those compliance checks. We also pride ourselves to create. We pride ourselves of creating a comfortable environment for foreign individuals. I'm not going to talk a lot about the AIFC Investment Tax Residence Program because my colleague Sevolet will talk about it a bit more. But we do have a special program that creates a better opportunities for individuals to get the investment tax resident status. That is the program is specially created and operated within the AIFC. And we also have a expat center, which is a dedicated division that created a comfortable environment for all the foreigners who would like to receive state services such as issuance of ID, driver issuance, migration services, etc., all in one place in more convenient and comfortable environment, which can be happen right here in the AIFC. So to ensure the smooth transition from your home jurisdiction to our jurisdiction and make our jurisdiction your home. And just a couple of words on enhanced due diligence process. This is something that have been up for quite a while, and also something that have been a topic, I think, everywhere. I don't think you can even find a jurisdiction right now without extra compliance stuff, and we are also following that too. This is something that applies to sanctioned jurisdictions. This is something to apply to the companies or individuals with red flags, etc. This is the extra step that happens when some of the red flags events are triggered. It doesn't mean it's bad. It doesn't mean that companies will be denied in registration or individuals will be denied in registration. It just means that you as an applicant have to provide extra information to open up something more, to disclose certain things that maybe you thought is not necessarily needed at the moment. And so if everything is fine, if you as an individual or your company is not on the sanctioned list, but you're just from sanctioned jurisdiction, or you have certain marks on your background history, but you have a good reasoning for that, and you have like a resolution to that, then most likely you'll be fine during the enhanced due diligence procedure. But this is very important because we want to make sure that our jurisdiction is in compliance with regulatory and legal standards, because it creates a safe environment for all, not only for you as an applicant, but for all of it. Again, this all comes back to being in compliance with the global standard to make sure that we are safe and green jurisdiction. And I'm all for now. I will be back, however, in a moment. I will give the floor to Victor, and I'll be back with the practical, insights and practical life hacks on how to become an AIFC participant. Thank you.
Okay, thank you, Jana. It was very interesting, insightful, and thank you for mentioning the tax benefits. We will continue and look closely at a few tax benefits that the AIFC provides to international investors, and I'll name them here. We will be looking at three tax incentives that are available for the AIFC participants, and we will look at them from practical perspective of how they can be used in practical situations and in cross-border structures. The first incentive has already been mentioned multiple times. It's an exemption for dividends and capital gains from dividends distributed by an AIFC subsidiary and capital gains from the sale of such a subsidiary. Second, there is an exemption for personal income tax for investments, tax residence for individuals, and several will be explaining how to use this exemption, how to use this tax incentive, and what can be done, what benefits it allows to achieve. And the third important exemption for international structures is an exemption for foundations located in the AIFC. It's an exemption from corporate income tax on investment income. And yeah, we will be looking at it as well. So those are three exemptions that we decided to look at during this webinar. This list is not exhaustive. There are other tax benefits, and Jana mentions them as well. But we selected these three because we see them most commonly applied in practice in international structures. Again, there are exemptions for domestic markets, for operational activities, but we will look at these three exemptions that are relevant for international cross-border structures and international tax planning. So the exemption for dividends and capital gains has already been mentioned multiple times. And let me address here a question from participants to this webinar. We received it before the webinar, and the question is as follows. A company is registered in the AIFC. It owns shares in another company located in Kazakhstan, but not registered in AIFC. Are dividends received from this company subject to personal income tax? Well, most likely dividends received from the company registered in AIFC, but let's look at the picture. In these slides, you see how the structure can be represented. There is an operating company that generates profits and distributes dividends. There is a holding or subholding company in the AIFC. Both are located in Kazakhstan, but only the holding company is a participant to the AIFC. And there is a shareholder, the ultimate beneficiary of this structure, of this business. And dividends that are distributed by the operating company are exempt from corporate income tax. And this is a domestic exemption. It's unconditional, and it's very simple. Domestic dividends are exempt from, as well as international. Well, dividends from foreign subsidiaries are exempt from corporate income tax in Kazakhstan. So there is no need for specific exemption for this specific rule or specific incentive for these dividends. They are just exempt based on domestic law, based on the tax code provisions. Then when these profits received by the holding company are further distributed as dividends to the shareholder, the exemption from personal income tax granted by the AIFC is important. And at the end of the day, if I understand the question correctly, on the whole distribution structure, on the whole ownership chain, we have the exemption for income, which makes this structure quite advantageous, I would say. Obviously, the operating company will need to pay corporate income tax based on applicable rules in Kazakhstan, but otherwise profits can be distributed free from taxation in Kazakhstan. But obviously, for the shareholder, dividends may be subject to taxation in the country where the shareholder is located. If he or she is a tax resident in Kazakhstan, then the exemption provided by the AIFC applies, and there is no personal income tax on such dividends. Otherwise, in another country, the investor may be subject to local income tax. But it's a different story. It depends on the personal tax planning, not on the structure as such, not on the way the exemptions work in Kazakhstan in respect of this structure. So this is it. We will look, as I said, at two other tax incentives granted by the AIFC. But before we move on, I will hand over back to Жанна, and she will share practical tips and recommendations for those who consider registering with the AIFC or is already a participant to the financial center.
Okay. Hello again. I'm happy to be back. So in terms of practical advice or practical life hacks, I have to say, though, that none of the AIFC employees are the consultants on any matter. We're not legal consultants or tax consultants or any consultant for that matter. And therefore, a company such as Global or other consulting firms are a very essential part to our ecosystem, not only in the AIFC but in the Kazakhstan in general, because they're these guides, and they provide the ones that would like to learn where to step and what to do. And so everything I say, this is not a legal advice. This is in no way tax advice or anything. This is just a practical advice based on the practice that we have, that we do. The department that I'm in charge of is, you can say, the front office of the AIFC. Most likely, if you ever ask the question via the forms online on our website or via email, most likely it has been through my department. So everything we say cannot be considered as legal or professional advice. However, it can be considered as practical advice when you do take into consideration the jurisdiction of the AIFC. So the three most I would say frequently asked questions as of right now, and those vary, by the way, from year to year, obviously, because evolution of things, because different environment, different macro or micro events that's happening around the world, and obviously those requests may vary. But for now, one of the first requests, and I'm saying from financial companies, this is economical substance. What it means is that if you ever operated in a different jurisdiction, you probably most likely understand what it means. It means that you have to have a practical substance, an economical substance, and basically an activity here in the AIFC. And this is applicable only for financial companies who are enjoying the whole tax benefit package. Basically, in order to receive those tax packages, you have to prove that you economically substant here in the AIFC. And it's usually so this is like a three things that you have to comply with. And I would suggest to read the guidance. Well, first of all, the economical substance rules that we have, read the guidance, and hire companies, the tax consultants specifically, that will help you to determine whether your maybe something that you do is not applicable in the substance, and that's why you have time to change that. And this is my practical advice, because A lot of times the guidance, a lot of times the request that we receive is related to the lack of practice. These economic substance rules have been around for quite some time. However, practically speaking, not a lot of companies alone can figure out what can they do. So number one, I always say that please do not be greedy and hire good tax consultants so that they can create your own internal tax policy. Because when it comes to tax authority, they're as human beings as we are, and a lot of times they might not know what are the crucial elements of financial services provision, and they shouldn't know everything because again they're human beings. And when the company has an internal tax policy, they have a framework that they can show to those tax authority employees and they can figure out things together. But this is basically much better. Think of it as a blueprint for your tax authority guy, for tax authority employee, that it will be easier for him or for her to understand what is the activity that is essential for you as a financial company. That is the practical advice that I would suggest. Another one in terms of enhanced diligence registration compliance procedure, I touched upon it in my previous previous presentation, and this is the practical advice that I would give is to have patience. And when you plan registration of the company here in the AIFC, you have to understand what kind of background the shareholder has, basically all the individuals on the matter, on the case, that will be either CEO or shareholder or the director of the company, and understand the risks. If there is a red flag going on, then most likely it will take a couple of months to conclude all of the enhanced due diligence procedure and the granting of the registration. And this is where I also say, please refer to the legal or business consultant, because the legal consultant would know the practices and procedures that is happening in the AIFC, and that way they can advise to the potential company and basically manage the expectation in terms of the registration procedures. Again, enhanced due diligence is not a bad procedure. This is not a bad thing to have. This is for the greater good of our all. However, and this is for the applicants that applying for the registration of the AIFC, if you feel like it's coming to a very long time to conclude the enhanced due diligence, please use this contact email and write us so that we can see the status of the company. Sometimes it happens because we're human beings. Sometimes the company's application may get lost in the sand, but it's rarely happened. But just in case, if you do feel like your case is taking too long for it, please give us an email and we'll see the status of the registration. It's also important to know that as part of the registration process, and I'm talking about non-financial company. Usually, if you haven't triggered the red flag for the compliance, there's a very minimum package of the information that is required from you as a company. However, if the enhanced due diligence compliance event is triggered, then there are going to be extra stuff that will be asked from you, such as business plan, such as HR plan for the next year or 3 years, financial plan, and also they're going to ask for the legal certificate, which can be issued by either a legal firm in Kazakhstan that is in a legal 500 list or IFRS 1000, or is a participant of the AIFC with the applicable license providing legal services. So this is something that I'm saying it so that you have an expectation of what the procedure will look like. Again, if you do have more questions about that, we can talk about it in Q&A, or you can shoot us an email to the address and then we will definitely answer you that. and also do's and don'ts after registration. Do's, and this is of course for AIFC participants. Do's, always check to our social network accounts such as LinkedIn, um, uh, where we are, Instagram, any social accounts that is official ours, because a lot of cool announcements such as this webinar, we announced that in our social media accounts, such as this webinar is announced. A lot of regulatory updates are announced as well. So do keep up with all of those and check your email for the communication. And please communicate with the regulator, because a lot of times um, regulator. So basically, we have a separate, an independent regulator in the AIFC, Astana Financial Service Authority, AFSA, and they're the ones that receive you, grant your registration or grant your license. So when they communicate with you and asking questions, please answer, because your life basically is going to be easier as a company if you have open communication with AFSA. And don'ts, do not miss the deadline of your annual account reporting, because every AIFC participant is required to submit a annual filing or annual report. So if you do miss your deadlines, that's okay. You can submit after that. There's going to be fee for submitting late. However, if you deliberately ignore it, or not deliberately, but if you have ignored it for a couple of years, there might be a very bad consequences for that. So please do not ignore your obligations in AIFC, as an AIFC participant. That way we can all have a peaceful life together. And again, if you do have any questions, we're happy to answer those. Please use the contact information on your screen. Follow us on LinkedIn or check out our website. This is all from me, and I'm going to give floor to Vsevolod. Thank you.
Hi everyone again. So speaking of Kazakhstan and the tax regulations there, obviously I couldn't resist to speak about the special tax regime that they have there in the AIFC for the individuals, because it is just a rare occasion that in the area of the CIS countries, we usually do not have special tax regimes for individuals, but in AIFC they have one, so let's analyze that and speak about that. So, the regime is obviously called the Investment Resident of Kazakhstan, which my colleagues previously talked about. And if you are slightly familiar with these types of regimes, you know that this is kind of a deal between you and the country. Under this deal, you are actually have to execute investments in the country, in the economy, in the special assets. Usually there is a list of such allowed assets which you can invest on. And in return, the country provides you with a migration status. It may be the passport, the citizenship in some countries, and in some other countries this is usually the residence permit, which allows you and or your family to live in this country. And obviously the most interesting part for us are the tax incentives, which the government, the country, provides you in return for your investments in the economy. We will later speak about mostly tax incentives which you can obtain via the investment residency of Kazakhstan. But for now, let's shortly go through the conditions for your investments, for your migration status, etc., etc. So, speaking of investments, under this program, you have to invest 60,000 of US dollars into the economy of Kazakhstan, into actually shares or units of companies or funds in the AIFC. And interestingly, you can also invest in your own company. So if you are planning to start a business or planning to relocate your business from another country to Kazakhstan, you may do that and obtain the investment residency of Kazakhstan as well. As for the immigration status, it is provided for both the investor and his family members. In Kazakhstan, under this program, you obtain the residency permit for 5 years. As for the tax incentives, unfortunately, only they are provided and they are allowed only for the investor, for the investment resident himself, and not for his family members. Speaking of the tax incentives, first, the investment resident of Kazakhstan is allowed to receive the tax residency certificate and the status of the tax resident in Kazakhstan after spending there only 90 days. This is actually quite interesting because we all know about Cyprus, for example, where you can obtain the tax residency in 60 days, or about the UAE, where you can obtain the tax residency in 90 days as well. But in Kazakhstan, it's much more interesting, and we'll talk about that later. Second, under the program, you may receive the exemption from the taxation under the CFC rules. In Kazakhstan, they are quite similar to what they have in Russia, for example. And the CFC rules in Russia, I usually call them the full-scale CFC rules because they apply not only at the event of the tax evasion, but the every tax resident of Russia with foreign companies, they have to do that annually. They have to submit the notifications, they have to calculate the profits of their foreign companies, and they have to submit all of the documents to the tax authorities regardless of the tax evasion. In comparison, for example, to Europe, where most in the absolute majority of the countries, CFC rules apply only at the event of the tax evasion. 3. You may obtain the exemption from taxation on income from foreign sources under the program of the investment residency in Kazakhstan. This is quite similar, for example, to what they had in Portugal and what they had in the UK, with some differences, obviously, because the regime in Portugal and in the UK are absolutely different. But we'll talk about it later as well with all of the details. And 4, there are also some other benefits, but they are quite small, and we will not talk about them in details because it is not the main features of the investment residency of Kazakhstan. So, speaking of the obtaining the tax residency status in only 90 days. I've already mentioned that in Cyprus you may obtain the tax residency status in only 60 days, but there is the main condition for that. You are not allowed to be a tax resident of any other country, meaning that if you are a tax resident in Cyprus using the 60 days feature, and at the same time you are a tax resident in any other country, the Cyprus will not support your tax residency in this country, meaning that there might be a problem, for example, if you are a tax resident in any other country subject to Center of Vital Interest, for example. Speaking of the UAE, you may obtain the tax residency there in 90 days as well, but you are subject to the additional conditions there as well. You have to have a permanent residence in the UAE, or conduct business, or to be employed in this country. In Kazakhstan, under the investment residency regime, the 90 days condition is actually unconditional. Sorry for this, meaning that as soon as you spend 90 days in the Kazakhstan, and if you are the user of this program, you will be a full-scale tax resident of Kazakhstan, meaning that you may actually apply the Article 4 of any double tax treaty, which is usually used in order to mitigate the conflict of the tax residency. And you finally may be able to obtain the status of the tax resident in Kazakhstan, being there only 90 days. Second, exemption from the taxation under the CFC rules. This is actually the short citation from the tax code of the Kazakhstan. It says that the profits of a CFC, be direct or indirect ownership and or control by an investment resident of the AIFC, is exempt from tax. There are actually some questions about this citation, because it is not actually, for me, it is not that clear what is meant under the direct or indirect ownership and or control by an investment resident. For example, if there is an investment resident of the AIFC which participates in the company for 25%, and another person participates in the same company for 75%, and this other person is not the investment resident of the AIFC, will be in this scenario the exemption from taxation be granted or not? So this is subject to analysis. As for the exemption from the taxation on income from foreign sources, the constitutional law of Kazakhstan on the AIFC says that individuals are exempt from tax on income from sources outside of Kazakhstan if they are investment residents in the Kazakhstan. But it also says that for the purposes of applying this paragraph, this resident pays the mandatory fee for the issuance of a document confirming residency, meaning actually ultimately the tax resident certificate. And this is actually the most interesting part. Making a step back to all of our incentives, in order to become a tax resident in Kazakhstan in 90 days, you ultimately have to apply for the tax residency certificate, because this is actually what the whole deal is about. And under the incentive number 3, the exemption from taxation on income from foreign sources, it is directly provided in the law that you have to pay the mandatory fee and that you have to obtain the tax residency certificate. But the point is, for the issuance of the tax residency certificate, you have to pay the 7,000 MRPs. MRP is the standardized amount of payment which you have to pay, but as for now, 7,000 MRPs are approximately $55,000. So we came to the conclusion that ultimately the special tax regime in Kazakhstan is actually not free, and you have to pay $55,000 US dollars, almost annually, actually, because those who are engaged in the international business, in the international dealings, they have to confirm their tax status, well, actually yearly, meaning that every year you have to pay 55,000 to obtain the tax residency certificate. But on the other hand, the special tax regime in Kazakhstan ultimately is still much cheaper than they have in other countries. So I think that Kazakhstan may take his prestigious place in our table about the foreign special tax regimes in different countries. Those who follow us from webinar to webinar know this table. And we are now updating it with Kazakhstan and their special tax regime because it looks pretty good from the tax perspective, and it is still much cheaper than, for example, the special tax regime in Switzerland, Greece, or Italy, where they actually doubled the annual payment the previous year to 200,000 euros every year to apply the incentives. So I guess this is it. So I hope that ultimately I was able to show you that the Kazakhstan may offer not only incentives for companies, but the incentives for the individuals as well. So I now pass the floor to Victor to finish our day today, and so we could move to the Q&A session.
Hello, everyone. Hello again. I'm back, and let's continue. Let's continue and explore other tax benefits that are provided by the Astana International Financial Centre. And I promise to consider one more exemption relating to our AIFC foundations. And we will then also address structuring of financing activities, as well as operating companies and operational structuring. This is the plan. Yeah, and the time flies, and let's move on. The AIFC Foundation. Let's look at the structure that is presented here in this slide. And here we see that there is a foundation in the AIFC, which invests in, which has various investments. First of all, portfolio investments and subsidiaries, operating companies in other countries. And it's owned by a non-Kazakhstani holding company. In this case, first of all, there should be an exemption for dividends that are distributed by the foundation. So this is the exemption which we already addressed. There is nothing new here, but it's helpful and useful for the structure. The fund itself has a specific exemption. It's interesting that it's based on the tax codes, on the domestic law, not on the constitutional law, on the AIFC. But nevertheless, the exemption for investment income for corporate income tax, and also, yeah, we will need for the investments. It's clear that if we receive investment income, for example, capital gains, dividends, then this income should be exempt. So there is a requirement that this income should be accounted for by the management company, but it's not so difficult to fulfill this condition. But for the subsidiaries, one needs to address. It's important to remember about CFC rules, and without going into details about the CFC rules in Kazakhstan, it should be mentioned that there is a wide list of countries, and if the those operating subsidiaries located in the whitelisted jurisdictions are exempt unconditionally. For example, Russia is exempt, and there are other countries. A few are listed here: the Netherlands, Belgium, Luxembourg, Ireland, the United Kingdom, and many other many other states are considered whitelisted. There is also an exemption for CFCs based on their effective tax rates. And unfortunately, Cyprus is not likely to meet this exemption. Or no, Cyprus can actually meet this exemption. I had an example, a practical case where Cyprus separate subsidiary didn't pay much tax, and this is why the effective tax rate exemption, which with a sort of benchmark rate of 10% was not met. But technically, Cyprus has 12.5% tax rates, and if it's a trading company, for example, conducts other operating activities, then the effective tax rate exemption is going to apply. The main condition here, apart from the tax itself, is that the country is not blacklisted, which is the case with Cyprus, as well as with the United Arab Emirates. But unfortunately, the rate in the United Arab Emirates is lower than 10%. It's 9% currently. So unless the company is extremely inefficient and has higher tax rates, effective tax rate than the nominal tax rate, then the exemption is not likely to apply. Which means that whenever you structure investments through a foundation, you have to consider CFC rules, and sometimes they may lead to additional inefficiencies at the level of the foundation. This is the bottom line. And let's look broader at investments of companies in Kazakhstan into other countries. It may be just a regular, let's consider a regular holding company without AIFC status or not a foundation, which receives dividends. And the good news here that the Kazakhstani law allows for exemption for dividends received unconditionally, regardless of the country where the operating company paying dividends is located. And capital gains. For capital gains, unfortunately, there is no exemption for capital gains from sale of foreign subsidiaries. So unless the holding company is in the is a foundation in AIFC, there is no exemption for this type of investment income, which calls for for an idea to convert dividends, capital gains into dividends. In case a subholding company is established, then whenever it sells the operating subsidiaries, the dividends that it distributes are going to be subject to the general exemption. Obviously, this structure should have a business rationale, but overall conversion of capital gains into dividends is possible using, let's say, additional planning solutions. And again, CFC rules need to be taken into account, and here is a list of the same 5 countries that I already mentioned, which are whitelisted. And technically, in these countries, there is a potential for exemption of capital gains, as well as withholding tax on dividends may not apply under certain conditions, or even unconditionally. For example, in the United Kingdom, there is no withholding tax on dividends, etc. So such structures can work and can help to maintain tax efficiency of investments, outbound investments of companies based in Kazakhstan. Okay, so we are now closing the section about the Astana International Financial Centre. 3 conclusions here. It's an effective instrument. So an AIFC foundation is an effective instrument, as we discussed, but it's important to consider CFC rules. Holding company, regular holding company in Kazakhstan can also be used in international structures, but its limitation is that there is no capital gain exemption for foreign subsidiaries in Kazakhstan. And for international structures, it may make sense to consider a sub-holding company. Okay, let's now move on to financing structures, and here we will briefly discuss two topics. First of all, capitalization rules and taxation of interests, in specifically withholding tax on interest in case gross-up provisions are used in loan agreements. It's a practical case practical cases that we see in our consulting work, and so I decided to share it here. Financing structures basically mean that there is a financing company or any other lender that provides loans to finance operations in Kazakhstan. So an operating company in Kazakhstan has borrows a loan and pays interest to the financing company. I think capitalization rules exist in Kazakhstan. The debt to equity ratio is 4 or 7 for finance industry. And controlled debts includes related party debts, as well as guaranteed debts and debts to parties from blacklisted countries, regardless whether they are related or not. So this is a very quick and high-level description of thin capitalization rules in Kazakhstan. They are much more complex, and many details exist which we'll not be able to address due to time constraints, but you are welcome to send us your questions. Our contacts are available, but yeah, here we just mentioned that there are thin capitalization rules in Kazakhstan, and details need to be taken into account. Now, withholding tax problem of gross-up provisions. It's not uncommon for loan agreements, especially with credit institutions, to have so-called gross-up clauses, a provision that any withholding tax is added to payments of interest, and effectively the payment is increased by any amount of withholding tax which is due, but it's not part of the interest rate. It's just added to whatever interest rate is agreed between the lender and the borrower. And the tax authority in Kazakhstan interprets such provisions as a payments of income or payments of withholding tax at the expense of the tax agents from what they call own funds of the tax agent, which leads to inability or prohibition of application of the reduced withholding tax rates. And there is a relatively recent clarification or a ruling from the Ministry of Finance, a decision that was published, and there is a link here. You will be able to see it, to look it up. It's in Russian, but the bottom line is that gross-up provisions lead to impossibility, to inability to apply tax treaty benefits. And the situation in the case that is addressed, I think, is Germany, where withholding tax on interest can be reduced to 10%, but due to this technical, let's say, arguments, the tax authorities disallow to apply the reduced rates and insist on paying withholding tax at a rate of 15%. So this is the problem. To what extent it's fair, it's an open question. And we will see when we look at case law that it is sometimes courts agree with this position, but there are instances where it is possible to rectify, to apply treaty benefits even if tax agents, even if a tax agent paid, grossed it up or paid this withholding tax based using its own funds. So the conclusion here is that until this practice changes or the legislation is amended, it makes sense to review and adjust wording of contracts, especially with banks, which may be difficult. Sometimes they are not flexible, but to apply treaty benefits and improve tax efficiency of financing structures, this needs to be taken care of. Okay, let's now move on to the final and relatively large section where we will look at operational structures. And let's talk about the rules that apply to operational structures. So far, we discussed holding operations and mainly looked at taxation of dividends and capital gains, and discussed how, based on various available exemptions and tax rules and tax treaty benefits, holding structures can be planned in a way that allows them to be tax efficient. But business is about operations, and after considering holding activities and financing structures, we need to look at operating structures, which are way more diverse. Operating structures includes trading activities, paying of, receiving income from services, paying for services, paying royalties. Those types of income and payments, they are part of the broad definition of operational activities. What are the key tax rules that apply that need to be taken into account? First is reverse charge VAT. There is a so-called VAT paid for a non-resident in Kazakhstan, which is known as reverse charge in most countries, reverse charge VAT. And the rules of this reverse charge VAT are similar to those used in other companies of Eurasian Economic Union, including Russia. And unfortunately, if this VAT is paid, and it should be paid if the company is VAT registered and pays, let's say, for services acquired abroad, for different types of services that are subject to VAT based on the place of supply rule. Then, in the absence of output VAT, this input VAT is lost, which leads to inefficiencies that should be considered, taken care of. Next, transfer pricing rules obviously apply. There are transfer pricing rules in Kazakhstan, which essentially mean that transactions should be based on market values, market level. And there is a concept which is known as constructive dividends or deemed dividends, which is essentially secondary transfer pricing adjustments. Whenever there is an adjustment that can be considered as, let's say, hidden profit distribution to a related party, then these adjustments is also characterized as dividends subject to withholding tax. And there are cases where this deemed dividends rule apply in practice, and we will look at one of such cases. Next, services. As I already mentioned in the very beginning, services are subject to withholding tax in Kazakhstan, but fortunately tax treaties allow for exemption from withholding tax, and in some cases there is a risk of reclassification of services, for example, services with technical or IT components, or there is a risk of reclassification of these services into royalties for withholding tax purposes, which will mean that no complete exemption will apply, and instead 10%, at least 10% withholding tax should be paid, or even 15% if the tax was not paid by the tax agent and is instead of charged by the tax authorities. Okay, let's look at a question from one of the webinar's participants to illustrate the concepts of withholding tax and the way how withholding tax apply to services in Kazakhstan. So the question is, it's fully represented on the slides, but in a nutshell, there is a Kazakhstani company that pays to a company in Russia, which is a related party because they have a common they have a participation of 33%. One company owns the other. Has a share of 33%. And starting September last year, this Russian company became a resident of Skolkovo, which means that they started to exempt their income from corporate income tax in Russia. And as a result, the company in Kazakhstan started to withhold corporate income tax from payments for services, arguing that, they must pay it as a tax agent and refer to MLI provisions. And the question to what extent this is appropriate, and the quick answer here is most likely yes, because as I already mentioned, there is a subject to tax rule for related party transactions that are subject to withholding tax. And here is a provision, a quote from article with the sinister number 666 of the tax codes of the Republic of Kazakhstan, where this provision is stated. And as we saw from the question, the company in Russia ceased to pay profits tax because it became a tax resident, a resident of Skolkovo. It started to apply the exemption, which means that the subject to tax rule does not apply, and it looks like the conservative treatment of the Kazakhstani company is appropriate, is in line with the provisions of the tax code. It doesn't mean that services should be subject to withholding tax in Kazakhstan and treaty benefits do not apply. Treaty benefits should exempt services from withholding tax, but the mechanism is different from what's in most cases what everyone is used to see, because the refunds of the tax is the proper mechanism to apply tax treaty benefits, because the tax agent is not allowed to apply the benefits, the reduced rates based on the domestic provisions. The treaty applies, but the mechanism is different from reducing or exempting services from withholding tax upon payments. So this is the answer to one of the questions that we received, which is a common question. Let's look now at practical cases and case law in operating structures, and we will consider two examples. And I think this will be the two examples that we will consider, and after that we will move on to Q&A session. So one is withholding tax in the presence of a branch in Kazakhstan, and the other is a secondary transfer pricing adjustments or deemed dividends adjustments, which I already mentioned. Here is a question. Again, it's fully represented on the slide, but in the key question here is that in a contract, a company in Kazakhstan claims that no treaty benefits on services, on withholding tax on services can apply, given that the Russian company has a permanent establishment in Kazakhstan, even though this permanent establishment is not involved in providing these services at all. And this is in line with the case, the Katka case, which we are going to consider. So in the structure that was addressed ultimately by courts, by the judges, there is a subsidiary in Kazakhstan which paid several types of income to its parent company in France. Payments for four types of income were paid: dividends and withholding tax of 5% applied. The company applied 5% withholding tax rates. Penalties on dividends without withholding tax. Services, no withholding tax was applied either, and royalties. And initially, the company didn't pay withholding tax, but then probably after realizing that royalties should be subject to withholding tax, even based on treaty provisions between Kazakhstan and France, charged 10% withholding tax on top of the royalties that were paid. So the tax inspectorate, after tax audit, disagreed and charged withholding tax at a rate of 20% to dividends, penalties, and services, and applied 15% in respect of royalties. It's interesting that the rate used was 20%, which is the rate that applies to which is the general corporate income tax rate. And the rationale here is that it's not withholding tax, it's the mechanism to pay corporate income tax payable by the branch. Yeah, I probably forgot to mention that the French parent company, let's look at the previous slides, had a branch in Kazakhstan. And this was the reason for the tax inspectorate to charge additional taxes to the Kazakhstani company, which paid four types of income to its parent company. So what was the rationale? Dividends, in view of the tax authorities, were related to a permanent establishment in Kazakhstan. This is why no treaty benefit should apply. Penalties on dividends should be characterized as dividends with the same withholding tax rate. Services provided were actually attributable to the branch or the permanent establishment. This is why, again, tax should be paid here. And here we have the arguments that withholding tax was paid from the funds of the tax agents. And the problem here is that the withholding tax and royalties was not paid right away. Initially, when the royalties were paid, it was charged on top of the payments after the company realized that withholding tax was due. Okay. So what did the court decide? In respect of dividends, the court supported the taxpayer because it was clear that the branch was not involved in the acquisition or management of the Kazakhstani company. And the branch's functions consisted only of providing certain technical and consulting services and were not related to investments. So the branch was not participating in strategic management of the subsidiary. This is why dividends should not be attributed to the branch, and dividends were correctly paid with withholding tax at a rate of 5%. Next, penalties on dividends. The court again supported the taxpayer and agreed that it was obligatory to pay these penalties, and it was a liability, not a dividend distribution. The rate was modest, just 0.02% per year per annum, which means that it's unlikely to be unreasonable. It's not doesn't seem to be abuse, doesn't seem to be direct abuse, and it's not hidden dividends. And since it's not dividends, then Article 21 other income applies, which protects such payments from taxation at source. So court supported the taxpayer here as well. In respect to services, again, the taxpayer managed to prove that services were not provided by the employees of the branch. There were a couple of employees, but those technical services were provided by the parent company itself, which means that it should not be subject to tax in Kazakhstan because they are not attributable to the branch, to the permanent establishments. And finally, in respect of royalties, the court supported the tax authority's decision and agreed to apply the domestic rates to royalties with no treaty benefits. And this demonstrates that these arguments that withholding tax should not be paid by the tax agent using their own funds prevails, and even the judges in this case agreed with the tax authorities and disallowed the tax treaty benefits, which should be taken into account. So the results: the tax inspectorate only won one episode of the four in respect of royalties only. 3 other types of income, for those the judges supported the taxpayer. What are the conclusions what the conclusions we can draw from this case? First of all, the existence of a branch doesn't by itself prevent the application of treaty benefits, but it's important to consider the functions of the branch and what employees it has. So various factors, whether this income is attributable to the branch, etc. Penalties and fines are other income that should be exempted under tax treaties, but it's important to avoid excessive interest rates. Otherwise, it may be considered being arm's length. And the problem of payments of withholding tax at the expense of the tax agent exists, and ideally it's necessary to apply reduced withholding tax rates upon payments and withhold tax properly, immediately, or in connection with the initial payments of income to a foreign country, to a foreign company. And in respect of services, formal overlap of the functions of the branch at headquarters can lead to additional scrutiny of tax claims, and detailed description of services will be helpful to prove that service income is not attributable to the branch. So here, let's go back to the question. If there is a permanent establishment or branch in Kazakhstan and income is not attributable to this branch, first of all, it will be based on correct support, and if it can be demonstrated that the service income is not attributable to the branch, it should be possible to argue that no withholding tax should apply. But unfortunately, as we see in practice, the tax authorities can scrutinize such situations, and unfortunately, there is a very disadvantageous provision in the tax codes of Kazakhstan, which essentially disallows to apply treaty benefits in presence of a branch in Kazakhstan. So if the company is prepared to present its position to the tax authorities and defend itself, including litigation with the tax authorities, then there are good grounds in case of proper support to defend the position that no withholding tax should apply. But it's easy to understand conservative treatments and approach, and this situation is not surprising, described in the question. Okay, the second case that we are going to consider is deemed withholding tax on dividends. It is a case quite an interesting one, where there was a company in Kazakhstan which supplied natural gas to its counterparty in China. And for one reason or another, it didn't supply correct transfer pricing methods to determine the revenue from these gas supplies, and the company itself made the transfer pricing adjustments, which, given that the company was loss-making, didn't lead to additional corporate income tax. So yeah, here probably it was not burdensome for the company to make these transfer pricing adjustments. But then the tax authorities came and said that the positive difference, the adjustment, should also be characterized as dividends and should be subject to withholding tax at a rate of 15%, which is fair if the company supplies something valuable at a cost or at a price which is below fair market value, then it can be argued that this company in this way distributes some value profits to a related party, which means that economically this deemed dividends adjustments is justified. There was a long story of this dispute in courts, but the final decision was to change the transfer pricing methods and to agree that withholding tax rates should be reduced under the tax treaty between China and Kazakhstan from 15% to 15% to 10%, which is good news. And the court also made a statement that the provision of the tax code do not prohibit the application of a tax treaty if there is a delay in submitting the tax residence certificates. Because obviously for treaty benefits, and I mentioned this in the very beginning, for treaty benefits, it's important to demonstrate that the company is tax resident in the respective country, in China in this case. But on the dates when the transfer pricing adjustment was made, obviously there was no certificate. The company did request it. It received it afterwards, during the tax audit, which allowed the company ultimately to apply the reduced withholding tax rate, which is, well, I think this is a well-balanced and a positive decision, although ultimately the company had to pay a withholding tax at a rate of 10% after the transfer pricing adjustment was made. I will briefly mention, just to mention, two other important cross-border cases. One is Prada, Kazakhstan, where services were requalified into royalties for withholding tax purposes, and another case, Sofia BV, where the tax agent successfully refunds excessively withheld tax. Whoever is interested in these cases can write us and request the wording of these cases, so we can discuss it offline, because, well, we do not have time to look into these cases in any more detail. The next section here was supposed to be benefits for IT companies, but given the time constraints, I decided that we will only, we will share these slides with the participants after the webinar. And now it will be necessary to spend the remaining 10 minutes to answer questions, which we received both during the events and before in the registration form from the participants who were registering to the webinar and asking questions up front. So may I suggest that the speakers now go online altogether, so that we could go through questions and try to address them. Okay, very good. Всеволод, what do you think? Would you like to read questions from the chat, or would you like to start from questions that we received before the webinar? I agree. I think one of the questions, we had a few questions about the Astana International Financial Centre, and at least one of them we will need Жанна to help us. But I can start from the question. Let me read it out. If a holding company is registered in the AIFC and has subsidiaries outside and size of AIFC engaged in the production, manufacturing, distribution, and sale of various kinds of inventory, will dividends received from these subsidiaries and redistributed to shareholders be subject to withholding tax? Well, the short answer is no, based on the exemption available to the participants. As I understand, we have a holding company here and its subsidiaries, and this example was on one of the slides. The subsidiaries distribute dividends, and then these dividends are paid to the shareholders of the company, which is the participants to the Astana International Financial Centre. And given that the exemption for dividends is unconditional, leaving apart public companies, there is a different story there. But if there is a regular non-public AIFC entity, participants, it can enjoy an exemption for dividends pretty much unconditionally, regardless of whether it receives profits from its local activities or from subsidiaries outside Astana, outside the AIFC. This is how I would say I would answer the question. Yeah, difficult to approve of absence of substance. And I think Жанна mentions that there are substance requirements for the AIFC participants. Would you like to comment on this, how the AIFC looks at it?
Sure, definitely. So first of all, well, thank you for the question and for the interest in the AIFC. First thing that you need to know, the economical and tax substance that I mentioned during my presentation, applicable only to financial companies applying for corporate income tax exemption, VAT exemption, etc. The rest of participants that are not considered as a financial company, so basically do not have a license on provision of financial activities, are not subject to this rules. Therefore, it is safe to assume that this economical substance will not be applicable in case of holding companies, because holding company is not a licensed activity. However, as an AIFC participant, you are required to, as a company, you're required to be registered legally and physically in the territory of the AIFC. So you can say that non-financial companies have much less of the substance compared to financial companies. However, certain substance must be there. Another thing that is required for the AIFC participant is to have at least one individual representing position CEO and director. It can be one person or it can be two people, but it has to be at least one person having that position, having appointed to that position. So what it means practically? Practically, it means that if you registered in legal address, and if tax authority comes to you, especially if you're a VAT payer, it comes to you and that tax authority employee cannot find you, then most likely you will receive a notice of in compliance, etc. So to be an AIFC participant, you have to have a office registered physically and legally, and have at least one person there in order to avoid any problems with the regulator or tax authority. And basically, so that you will not, so that you will follow our rules. I hope I answered your question.
Yeah, absolutely. And I'm aware of cases where the tax authorities came to a company's office and didn't find anyone, and then even blocked the company's bank accounts.
Yeah, unfortunately, this may happen, and a lot of companies would not think of it. And you see, this is not only because it's AIFC companies. This is
Mhm.
this is a worldwide practice, I would say, and in Kazakhstan it also practiced as well. Even if you're not AIFC participant, this may happen to you. It may happen to you in different jurisdiction as well. So it's always a good sense to have legal and physical address and at least one person. As I said, nor Kazakhstan or us meant to be an offshore jurisdiction where you can just rent PO box, and basically
Mhm.
like the jurisdiction we don't have to have anyone. We're not that, and I think the more we exist in this substance kind of rules world, I think this kind of jurisdiction will be less and less as the time comes.
Yeah, yeah, I agree. And so when we, please go on.
Well, yes, and that would be applicable to Kazakhstani companies as well. So this rule of being legally and physically present, it's also applicable for the legal entity that registered in Kazakhstan mainland, not only to the AFC. But yes, according to our rules and regulations, the main business has to be conducted in the territory or from the territory of the AFC. So by not doing that, you're basically violating the rules, and that can resulted in a bad situation with tax authority and our regulator. So
Mhm. Yeah, I agree. And when we advise our clients on international structures, we tend to recommend to have robust structures with proper substance at each level, and empty shell companies, they do not survive in the modern environments, regardless of the country where they are
it's true.
created. So we always tend to recommend, and sometimes it's easier and sometimes even less expensive to have a proper substance in the countries where the
I
group
agree.
carries out business than
Yeah,
to try to achieve tax benefits with empty companies.
I agree. Yeah.
Okay, let me read out one question from the registration form, which we received before the events. Antonina asks, should a resident of Astana Hub withhold VAT or any other tax when making payment to a non-resident of Kazakhstan, individual or legal entity, for services in IT programming, design or consulting, and for purchase of intellectual property such as images? Well, this is a complex question, and unfortunately we didn't have time to consider tax incentives in Astana Hub. I think broadly, first of all, there is an exemption for reverse charge VAT in Astana Hub. So there is a possibility not to pay VAT on acquisition of services from non-residents for Astana Hub participants. In respect of other taxes, I would pay attention to withholding tax, because unfortunately there was an exemption for withholding tax as well. It ceased to apply it ceased to apply from 2024, so more than a year. It's not applicable, unfortunately. It was supposed to apply for a limited period of time, which means that, for example, purchase of intellectual property, if it's considered royalties, payments for intellectual property, which is considered royalties, is going to be subject to withholding tax. Reduced rates apply, but the minimum achievable rate is 10%. This is why I would look at it from this perspective and would expect some withholding tax here. And maybe even in service agreements, if they have characteristics of royalties, as we see in other cases, it's not uncommon for the tax authorities to see royalties in service payments as well. So, yeah, this is a broad answer. More details probably will need to be addressed based on specific types of agreements and circumstances that described in the question. Vsevolod, would you like to comment on? I see correspondence in the chat about tax residency in Cyprus and Kazakhstan. But I also see that you
I
responded to
have
the
already
question.
responded to that.
Okay. Okay.
There was one more question from the chat about the arbitration services.
And I saw as well on a question about related parties. That wouldn't be possible for me to comment it right away. It's an interesting question. First of all, it requires a more careful examination or review of practice, which I unfortunately didn't have a chance to do. And this is a very specific provision. I would say in a broader sense that it is still possible to apply the exemption for services based on tax treaty provisions. So if you fulfill the treaty conditions, then depending on the location of the service provider, it may be possible to exempt it from withholding tax even regardless of the nature of the services. This is my general answer. So the specific question about arbitration services.
Okay. So if we have already asked about the arbitration services and the related parties, this is all from the chat, I guess.
Mm-hmm. I can address one or two questions.
One more question which we received just now. What is the status of the proposal in the tax code to cancel exemption on taxation of capital gains for shares with ownership more than 3 years?
Again, the last time I checked, it didn't seem to me that the exemption was supposed to be abolished. But no, I can't say right away. The discussions are ongoing. We'll have to see one or another version of the tax code, so the draft tax code being published. I kind of hope that the 3-year exemption is going to remain in place, because it's a very useful exemption for strategic investors in Kazakhstan.
It's actually quite a common situation, and I would say that it is too early to discuss that, because this is only a proposal still. So we'll see what happens later, because it is not a rare thing that what we had at the beginning is not actually what we have at the end.
In the final, exactly. And last year, the draft tax code was published in June or July, so we'll have to wait and see probably a few months before a draft version is made available to the public.
Okay. So, do we have anything more which we received prior to the webinar?
Well, let me suggest we have a few more questions. Some of them are quite detailed, and I think we would better address them directly with those who asked those questions. So for the benefits of time and also for the benefits of participants, to avoid very narrow and specific discussions, I would address remaining questions that we received upfront offline. And given that we already run out of time, I would suggest that we call it a day and say a few final words to thank you, the participants.
The last but not the least, when the presentation from today and the recordings will be available?
Hopefully next week. So please be patient. We usually take a few days, up to a week, to process the materials. So next week we are going to circulate the materials. This is the plan. Sometimes we have a few more. We need a few more days, but the plan is to circulate the presentation and recordings after they are processed next week.
And I should remind that first, all of the materials will be available at our LinkedIn page.
Exactly. Thank you for reminding. Indeed, we are planning to publish the presentation with the section that we didn't have chance to address due to time constraints on our corporate LinkedIn webpage. So follow us to receive the presentation first, and also to be the first to stay up to date with international tax news and planning ideas. So follow us on LinkedIn. I think this is it. Let me suggest that we call it today, and thank you, the participants. It was really a pleasure to be with you 2.5 hours. Thank you for your questions. Thank you for your participation. It's a pleasure it was a pleasure to be with you. So let's, Zhanna, would you like to?
It was a great pleasure. So you'll have our contacts after we finish the webinar. So feel free to contact us whether or not you have tax questions and tax issues related to Kazakhstan, AIFC, or any other countries. So looking forward to meeting you soon in email correspondence or on our next events. Zhanna?
Oh, thank you. Thank you all for this great participation. Thank you guys for organizing this amazing webinar. I would like to use this opportunity to invite you all to Astana Finance Days. This is a flagship event that we host every year. This year is going to be in the beginning of September. If you're planning to visit Kazakhstan, Astana, this is the great opportunity. So we'll be happy to see you all. Thank you.
Yeah, thank you, and I'm it was an honor to have a speaker from the Astana International Financial Centre. It was a pleasure to be with you as well. Thank you, Zhanna, for participating and inviting your participants. And I hope that some of the participants to this webinar will contact you because they are interested in the benefits that are offered by the Astana International Financial Centre. And I'm never tired of saying that each situation is unique, and we help our clients to adapt their structures and to plan their investments properly in tax-efficient manner and to avoid tax risks and excessive tax burden. So our contact details will be on the last slides, and feel free to write us and contact us to discuss your specific case and your structure.
Thank you.
Thank you all.
Thank you.